Good morning from Los Angeles. I am back. Let me adjust my mic. Took a little break from doing lives, scheduling issues, family obligations, things like that. And I have quieted down my trading, working on a 10% drawdown. Not good. Well, not good doesn't cut it. You need to manage risk regardless of what's going on. What is wrong with my mic? Can you guys hear me? Can you guys hear me? If you guys can hear me, please put a thumbs up. Yes? No? Traveler, can you put a thumbs up? Anyway, hopefully you guys can hear me. If you can't hear me, put a thumbs down. If you can hear me, put a thumbs up. So what's going on? Well, welcome to Trading with Sergio, Monday edition. Thank you, guys. We have a busy week with economic data coming out, specifically on inflation. So what I decided to do with these lives is I'm going to go live Monday, Wednesday, and Fridays is going to be power hour as usual, 10 a.m. Pacific, 1 p.m. Eastern. So if you're subscribed, please turn on notifications so you get notified about half hour before I go live. And yeah, that's it. And let's see what the economic data looks like this week. Tomorrow, OPEC monthly report, nothing burger. However, tomorrow again, July CPI inflation data. I have done enough videos about government gaslighting, CPI data, all this stuff. It's on the channel. You can go check it out. I don't believe inflation is 2.6%, but government says it's 2.6%. They're working towards 2%. My $100 bill is losing 6, 7, 8% of buying power every year. That's my inflation. I don't know how you guys' $100 is behaving, but my $100 is not listening to the government. On Thursday, July PPI inflation. So CPI is consumer price index. PPI is producer price index. Both are important. We have a one-day break in between. Friday, another important metric, July retail sales data. As we know, our economy depends, our economy, GDP basically, is, let's see, 80% or 75 to 80% is consumer spending. As the consumer goes, so goes the economy, although it seems like AI is going to create a lot more productivity, but then we don't know that's a different topic for a different day. And also on Friday, consumer sentiment data is coming out. And this week we have a total of 5 Fed speakers speaking. There is definitely a rate after this CPI and PPI data. If the numbers are behaving, I would say 2.4 to 2.6 range. The rate cuts certainty is going to be extremely high for September. And then we'll figure out, with looking at the dot plots, how many cuts we may get additionally on top of what we're going to get in September. Probably going to be a quarter point. Yeah, it's an important week. Volatility was kind of introduced about 5 trading days ago. We had a little couple of percent sell-off, and then, of course, it was bought. The dip was bought right back up. NASDAQ all-time highs, S&P 500 pretty close to all-time high. Although they're working on, bearish divergences. But when I go to the charts, I'll explain that, or I talk to you guys about it. And I'm also going to do on Mondays, Wednesdays. I may kick in, some Tuesday or Thursday trading with Sergio's. That's why I'm saying please subscribe, please share, and please turn on notifications so you'll know when I'm going live. Some impromptu lives maybe. However, the members live every Wednesday, which is a additional perk on top of the Telegram chat group, is going on between 4 and 6 p.m. Pacific, depending on my schedule. I have a couple of new members. Please, if you're watching this, or if you do end up watching the replay, please email me, sergio@sergioavedian.com, in order for me to send you the Telegram chat group link so you can join our wonderful group of traders. And what do they get? Obviously, they get my positions posted live every day after the close, and they get live transactions, whatever I'm buying and selling, equities, options, whatever they are. They get that live as well. Again, none of this is trading or financial advice. Do your own due diligence. They're doing fine on their own, but we do have good discussions. We have certainly expanded our watch list because they're watching certain things and trading certain things. So it's a two-way highway. Nobody hogs the channel and or the chat. Very respectful, amazing, really amazing. And I think they've learned quite a bit over the past 3 months, and they, education continues. My education continues. So yeah, trading with Sergio Monday, 10 a.m. Pacific, 1 p.m. Eastern, again on Wednesday, and Power Hour on Friday continues with a few other ones sprinkled in. For example, if the economic data tomorrow is such that we have volatility, then I'll go live again around 10 a.m. Pacific for a short period of time. Today, I'll put some of you on if you guys want. I have time, additional time after I go through a couple of quick topics. Those are the things that I want to talk about. When there is nothing to talk about that I don't want to talk about, we'll just do trading with Sergio, go through positions, charts, and then move on. But today I want to talk to you guys about two things. As you guys know, not sure what a senator gets paid or a House of Representative gets paid after they get elected by the government. I'm not sure. I think it's definitely less than a couple $100,000 a year. Senators, I think, are 180 range. Even the president, I think, is like 400 plus thousand, somewhere in that range. So compared to some CEOs, obviously, nowhere near, right, with the multi-tens of millions of dollars the CEOs make. But then there's only one CEO, but there's also one president, only 100 senators. So the question is, should House members be allowed to trade actively? When I say actively, like a hedge fund. Granted, they probably have given authority or power of attorney or whatever they do, whatever the legalities are. They'll probably put everything they have in a trust to make it transparent, probably. But should they trade equities actively? Now, there is a law that's being proposed in the Senate and the House, obviously, to ban senators and House members from trading actively. Nancy Pelosi was being interviewed on CNBC, and I don't think she was supposed to be asked that question because most of these things are scripted. And kudos to the interviewer. He asked her about it straight up, and she was kind of taken back, and she's completely against it. Well, why would you say that? Why would you be against it, Nancy Pelosi? It's because with her $175,000, let's say, salary, Nancy Pelosi's net worth, since she's been in the Senate for God knows how many years, couple of decades probably, has increased, and her husband's, who supposedly is the manager of her account, has gone to $250 million, and they are extremely active trading. Now, she's not the top producer, actually. There were a couple of House members who beat every hedge fund, including myself, last year with about 120 to 140% returns. I'm like, okay. Now, President Trump threw her under the bus a couple of days ago, and I want to talk about that. I think President Trump has a point here. Now, I'm not sure about his approach. As usual, as we know, President Trump doesn't hold any punches. He goes all out. Whatever he's going to say, he says it. But he said that crooked Nancy Pelosi and her very interesting husband beat every hedge fund in 2024. Correct. In other words, these two very average minds beat all of the super geniuses on Wall Street, thousands of them. It's all inside information with capital letters. Is anybody looking into this? She's a disgusting degenerate who impeached me twice on no grounds and lost. How are you feeling now, Nancy? Yeah, there you go. There's no punches drawn on that one. However, I don't agree with some of the stuff. Look, I don't know if it's inside information or not. Obviously, it's illegal to trade on inside information. But nobody with a straight face can tell me that these folks, these 100 senators, are probably as powerful, if not more powerful, than the president. Why? Because they have staying power. They have no there are some senators who've been in there for 20, 25 years, including Nancy Pelosi. So my point is to all of this, maybe it's not inside information. Maybe the language is obviously, rude and abusive or whatever it is. But should they be allowed to actively trade? In fact, the top return was by a House member from Texas, and he was a Republican, was 140%. He beat me by 20% last year. I was at 120%. I beat every hedge fund, but this guy traded like a pro's pro. FYI, hedge fund, the best hedge fund last year was about 33%. Beat the market by a little bit and beat the benchmark by a little bit. But 140%, how's Nancy Pelosi net worth is $240 million, $50 million, while she's earning a salary of $175,000. I'm assuming it's 175. If I'm wrong, you guys can correct me. But according to the Coinbase letter, Nancy Pelosi is up over 10 million in the stock market this week as Nvidia shares rebound. Nvidia shares are making all-time highs, 10 million in a week. She purchased 2.5 million of Nvidia last month. Well, pretty timely. Now, if it's not inside information, they certainly do have information that the public does not have. They are the ones writing the laws. I mean, there is no question about that. Is there? So my point to all of this, Senator Hawley actually has introduced a bill. I like Senator Hawley quite a bit. And he just gives, everybody hell. But young guy, energetic, and he's like, we should not be allowed to trade actively. We should just put everything in a trust, give it to a money manager. They do whatever they do. But it's not like that. And Nancy Pelosi is completely against this. I mean, she threw a fit during that interview. You guys can go check it out on CNBC. And a lot of members are also coming out and talking against this. I don't blame them. I mean, if I'm getting 140% return and increasing my wealth by a couple $100 million in 20 years, why not? I would be opposed to it too. But besides the inside information part, okay, since they write all the laws, and since they're aware, and since they're chairman and women of these committees, where all these bills have to go through, they have advance notice of what's coming, unlike the regular Joe or a Robinhood account holder like myself. So I'm just saying that I think I agree with Senator Hawley and with this bill that's being proposed in the House and the Senate, that they should not be allowed to trade. They should just take their hands off and do the public's work, because that's why they got elected for. They got elected to do American public's work. So let me know. You guys can put it in the chat or respond, but I'm against it. I don't think they should be allowed to trade. So one quick other topic before I go into it. Let me go into the chat. Traveler, good morning. Good morning, everyone. SJ, Doug, Popcorn, Yellow Stripe, Smile. That's right. Good morning, Luis. Mr. Gambit. Mr. Gambit, what are you saying? Sergio, there is apps now. Yes, I do. I know. Warren Buffett is in all cash, pretty much. He's sitting on 350 billion in treasury bills. Actually, he holds more treasury bills than the federal government. Yes, there is. In fact, the CEO of Uber invested in that as well. There is this young guy who created this app. Now, again, you guys have to understand, when these trades are posted, they are not posted live like I do on my Telegram chat group. They're posted with a delay. But even with a delay, if you look at NVIDIA, if you look at everything Nancy Pelosi has invested in, like Avago and things like that, it has turned into gold, right? Well, investing a lot doesn't go hand to hand with higher percentage, Mr. Gambit. I mean, look at all these hedge funds. These hedge funds are on $4, $5, $6, $10 billion. They leverage it. They still can hardly beat the averages, or the benchmark. So that has nothing to do with each other. What I'm saying is that, though, I don't think they should be allowed to trade. So I think the guys who are around Trump ride the market. Yeah, I don't know. I mean, look, these are all because, it's not a political thing here. All I'm saying is the inside information has existed on Wall Street since the dawn of time, okay? And although it's illegal, somebody always knows. Somebody always knows. When I'm watching a stock and stock takes a pop with no news, news is coming. Somebody always knows. Options go crazy. Things happen. So to me, it's a different question. Well, there is a bill now. We'll see. We'll see what happens. Hey, good morning. Good morning. Good morning. Any valuable opinion from the expert on what's going on? And yeah, I'll talk a little bit about crypto. In fact, let's do it now. I am a hodler of Bitcoin. I have bought Bitcoin in 2020 originally, didn't do anything else. Although this year, I've said it before publicly, it's on the channel, I have been dollar cost averaging every Monday into Bitcoin, whatever the price is. In fact, I bought some more today at I think 119,800. So I'm averaging up, obviously. But I have very clear opinions about Bitcoin. I don't touch anything else. I should have absolutely gone into Ethereum. I didn't. But then we know what's happening with Ethereum, right? All these funds are getting created to buy Ethereum. Ethereum literally has doubled. But I'm just a believer in Bitcoin. I don't think there is finite amount of Ethereum. I think Ethereum can get created. But Tom Lee got involved. Everybody else is getting involved. Obviously, big money is going in. And we know what's going on. But other than Bitcoin, Solana, and Litecoin, and things like that, I'm not looking into it. Bitcoin, because I believe it's finite. I believe it protects me from debasing of the US dollar. I believe it helps me fight inflation, let's say, not exactly, or hedge inflation. It's not really exactly an inflation hedge, but there's a finite amount of Bitcoin out there. Unless they can create another 21 million Bitcoin, we know it's 21 million, and about 18 million are spoken for. And every institution, including the BlackRock ETF, the money is pouring in. So once it's done, it's done. That's why I believe in Bitcoin, and that's about it. Yeah, I remember Trump coin. It went from $5 to $75, and then a bunch of bag holders now on that one. I sold Ethereum when it touched 2,000. Yeah, that's fine. I mean, those three are fine. I am definitely, I missed the boat on Ethereum, but I'm just doing Bitcoin. It's not because Michael Saylor is doing it or this or that. It's a finite thing, unlike the US dollar, where we can create trillions of US dollars. Oh, FYI, we just hit 37 trillion in national debt, by the way, folks. If you guys didn't know, that happened over the weekend. Count 100 days, we're going to be at 38 trillion. Nothing will change. Ken was, kicked down the road by the BBB, the Big Beautiful Bill. Yeah, we're just going to keep borrowing and spending, and as long as that's continuing, as long as the money supply is growing and M2 money supply is growing, just crazy, ridiculous numbers. Yeah, you need protection, don't listen to the government. Like tomorrow, they're going to come up with CPI of 2.5% probably. Okay. Is it 2.5%? This year, okay, I know there's a compounding effect, but is it 2.5%? Has everything you bought since January this year in 2025 has only gone up 2.5%? Some things have gone down, some things have gone up. But if you look at over the last 5 years, from healthcare to car maintenance to gasoline to insurances to schooling to whatever, everything, is it 2.5% a year? No, I don't think it is. But, I know my budget, and I know I'm paying a lot more than 2.5% for things that I paid a lot less 4 or 5 years ago. But it is what it is. And looking forward to see what trades you're looking at. Yeah, I'm looking at, I've reduced my trading. I'm holding on to only 3 positions as opposed to 15, 16 positions a couple of months ago. I've spoken about that clearly. In this business, you need confidence. And if your confidence is not there, you shouldn't be pressing. Wait for your time. It will come. Markets open every day. No need to push when you don't need to push. And that's the way I look at things. I'm still up substantially for the year. My goal is 100% for the year. Can I do that this year? We'll see. If I do 100% this year, I think a little bit better than the 120% I did last year. For the fact that since obviously the new administration came in, volatility has increased immensely. Overnight exposure and overnight risk has increased immensely. Tweet risk has increased immensely, right? I mean, we all know what's going on. I'm not saying it's good or bad. It's just that if you're on the wrong side of some of these trades, you're going to get your face ripped from day to day, and that's increased risk. So for increased risk, there has to be an increased reward, that's why I have a goal of 100%. At the moment, I'm like about 55, 56%. I was up close to 70%, so working on a 10% drawdown. But it's okay, we've gone through these many, 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 many times, and longevity is the key. Longevity is the key. Yeah, you have to have confidence. I mean, look, in everything you do, from sporting, basketball player, football player, baseball player, a boxer, whatever sport you're in, brain surgeon. I mean, you have to have confidence. If you just killed somebody cutting the wrong stuff, I'm just, giving an example, probably not a good analogy. You need confidence in everything you do. And trading is no different. I treat it as a business. I don't mess around with it. If I'm dealing with a 6-figure account that I need to hold together when things are bad, and I need to push when things are good. When I say good or bad, nothing to do with the market. I'm long, short all the time anyway. But I'm talking personally, right? Personally, I have to manage risk, and I have a goal. In order to reach that goal, you have to adjust and amend during the year, which I did about a couple of weeks ago. And that's what I'm going to do. Just stay disciplined. Don't push things that you see they're there. Don't overtrade. Take less trades, and let your winners run, and let's take small losses. So, one more question, and I'll go to my next topic. Let us bring the 15,995 Tesla to market. Okay, well, I don't know about 15,995. Elon does a lot of things. I'm actually working on couple other projects, setting up the legality and the background work. I want to be owner of a fleet, actually, of these robocabs when they come out. The one that he talked about 6 months ago, the gull-wing ones with 2-seaters that we can plug onto a network and make us money while we're sleeping. Look, folks, that's the future. I think it's a brilliant idea, but then it requires a lot of work, but I'm not shy about doing that. So the second thing that I want to talk about, and I'll go back to questions and back to positions. If you guys want to come on, you're more than welcome to. Let me put, actually, after the second topic, I'll put the link up, because I have some time today. So second thing I want to talk about, I do have a lot of friends, obviously, in the trading world. and some day trade, some swing trade, some position trade, some buy and hold long term, things like that. There are clear odds on this. It's like it's a given, right? Math is math. If you ignore math, it's, do it at your own risk. And I can't ignore math. Math still is valuable. But so what are the odds? What are the odds of, folks being profitable over long periods of time? Day trading, swing trading, buying and holding. There are odds for these, and obviously each one comes with its own set of risks, okay? Day trading has become very popular over the last, I don't know, since the pandemic, actually, because people sitting home and swinging options and trading futures and doing this and doing that. Look, I've traded all of it. For me, personally speaking, once in a while, I dabble into zero DTE trading, but that's about it. That's the extent of it. But there are odds for this. So let's look at these odds. Here are the odds. These are facts. You can't argue with these facts. So if you look at the market in a 200-day trading day year, 54% of the time, the market's green on a single day. So basically, if you're day trading, yes, you can go long, you can go short, but let's assume you're only going long. With slippage, with commissions, and with this and with that, that will easily eat away 4 or 5% of your profits. So it's basically a coin flip, 50-50, okay? If you're day trading, those are your odds. You can draw all the lines on your chart, create all the biases, whatever you want. Those are your odds. Those are not good odds for me, okay? Now, if you look at it as a year, green years are 75% of the time. So even with down years, green years outnumber the down years 75 to 25%. If you take it longer term, with a longer term perspective, green decade is 94% of the time. Okay, so we're going from day to 54% to green year to 75%. This is going back 150 years. Green decade, 94%, and green 20 years, meaning after 20 years, if you bought the index, let's say, we're not talking individual stocks, bought the index, S&P 500 or the triple Qs, 20 years, it's 100%. So if you bought an index absolutely at the top, let's assume you bought an index absolutely at the top in 2008 or in the 2008 financial crisis or 2000 dot-com bubble. After 20 years, yes, you're going to say it's a long time, but even if you did not DCA any further, dollar cost average further, you would have been positive. That's the power of compounding. That's the power of dollar cost averaging. That's what I recommend to everybody who's getting into investing. Again, none of it is investing financial advice, but these are the odds. These odds work. These are your odds. Do you want to gamble at 54% after commissions, 50-50, coin flip? Do you want a green year at 75% of the time, green decade 94% of the time, and green 20 years 100% of the time? Long-term investing wins every time. It does. Now, there's other issues with this. There is risks, obviously. Risks are always there, and you have to weigh the risks in. But even with the risk, these numbers hold true. So, but people don't have the patience these days. They want to be jockeys. They want to be hummingbirds. They want to jump from flower to flower. Today's stock is this. Tomorrow's meme stock is that. You do that, you're not going to have that much success, period. I mean, we're just talking indexes now. And what are the risk factors? Well, sure, there are risk factors. Like at the moment, we're overbought, right? 5, 10, 15% correction is normal. Well, if you DCA every time you have a 10, 15, 20% correction, you're going to do wonderful. Because there is also one saying that my mentors beat into me. They used to say, that was before HFT, that was before high frequency trading, obviously the algorithms and things like that. They used to say time spent in the market will beat timing the market every single time. You buy high, you buy low. That's what I'm doing with Bitcoin, for example. Doesn't matter, right? So Greed, extreme greed. Well, it seems like last week before that little 3-4% sell-off, we had extreme greed. All these meme stocks were acting crazy. This is a valid one. High multiples, historically high multiples on tech. They have been there. Every tech stock is, if you look at multiples, is extremely overvalued. But then they become half the market. 7-8 stocks have become close to 50% of the market. Obviously, Nvidia's and pound, all the big names, all the Mag 7s, obviously. Okay, there's a rate cut. Well, now if the rate cut comes and market's already at an all-time high, is that a positive? Is that a negative? We're going to find out. A lot of people say it's going to be a positive. Well, we're already at an all-time high in all asset classes. Gold at 3,500, real estate, stock market, Bitcoin, pretty close to all-time highs, if not all-time highs. Is the rate cut going to be more positive on top of what we've seen already? I'm not sure. I think I'm not trying to be contrarian. I think the market will read the rate cut as such. Is the rate cut due to the economy slowing? And what's going to happen to those multiples? Because historically on rate cut reductions, multiples go higher, but we're already at like 26.3, 26.5%. I mean, 26.3, 26.5, not percent, PE ratio for the S&P 500. So we'll see. And, these things, Trump tariffs, that musical chairs continues. We'll still have to settle with the Chinese and Powell firing, but I think he's dead anyway. He's a sitting duck, dead duck. I don't think anybody is going to listen to it. But so those are the risks. But over long periods of time, okay, if you DCA into an index, forget about picking stocks, this and that. Passive investing, as opposed to active investing, has beaten all the short-term stuff that we deal with all the time. Now, how do you manage that? Well, you have to have two accounts. Like I have two accounts. I have a trading account that I actively trade day to day almost, and I have an investing account. You also have to understand the tax ramifications of day trading, right? And not only your accountant is going to go crazy at the end of the year, right? Because you have a million transactions and you made 8%. I'm like, what's the point of that? If you're going to actively trade, you need to triple minimum in my book the benchmarks return. Otherwise, don't do it. You're just wasting time. You're just spinning your wheels. Are there some people who are successful at day trading? Sure, they are. But the majority loses because the odds are against you. It's 50-50. It's a coin flip. You can do all you want. Nobody knows what the market's going to do. But over longer periods of time, dollar cost averaging into an index will beat any hedge fund, any hotshot trader, anytime. But we don't have the patience anymore. We like short-term, stuff. We have the adrenaline rush and we get the endorphins flowing if we have a good trade. And then, that's why you have to have two accounts, trade, play your games, whatever you want to do. But make sure you're getting 3x of the index benchmark returns, beat that by 3x, 4x, 5x, hopefully. And on the long-term side, capital gains tax rates, right? They got to take advantage of that. There's 19% versus your ordinary income tax rates when you're day trading or when you're swing trading short-term. Separating it makes it easier to see a clearer picture. And I do that. I've been doing that for a long time, and I highly recommend you do that. But over long periods of time, investing into an index fund will beat anything else. And that would be my recommendation. So, all right. What else we got going? We got the market, more questions. So I answered pretty much all of these. Okay. Let's go to the positions. Here we are. Market just grinding higher slowly. Not much is going on, really. But let me go through the positions. You guys can see this, I'm sure. I'll go through the charts in a minute. All right, so I have only 3 positions. As I said, I have 110 calls August 20, which I got stuck with on AIVA Technologies. Stock is about 13.5. They are August expiration, so got 39 days to go. August 20 calls. Horrible trade, really. But then, I DCA'd a little bit. Let's see, just save my butt out of that. I'm long 8,000 shares of Lithium America. Average cost 313, but I call sold cover calls. Cost is exactly 3 actually. But now, a couple of weeks ago, I sold the 3 calls and I sold the 2.5 puts as a covered strangle. Not a symmetric one, but good enough. If it's over 3, it's a 302, 303. If it's over 3, this Friday, they expire this Friday, I'm going to get called away. I'm going to say good riddance, have a good day, and let it go. We'll make some money out of it. And another ridiculous trade that I got into is after it went down, Lululemon went down 40, 50%. I got into some October. Well, I want to play the earnings game on this one. I think it's going to be a Nike, but then don't take my word for it. I'm not too confident about it. I'm long 50 Lululemon October, 250 calls. Average cost 436. They're down to like 270. I will average down maybe 10 more calls, but overall the account is about 85% cash, waiting for my spots. And those are the 3 positions I have really. And I will post these on the community page of the YouTube channel. Obviously, I post it every day for the members group. And let's go through some charts, go through some watch lists. Charts, big charts. Here we are. If you have any questions, please post it. Let's fix this real quick. All right, so this is the triple Qs, new all-time high today. It's struggling kind of, So we had the sell-off from 574 to 550 range. And then again, like a little 3%, 4% correction. And then bouncing back, working on a bearish divergence on the MACD. Every new high is on non-confirming technicals, so I'm really being careful, and volume is super anemic. On the sell-off, actually, volume was pretty heavy. So usually we will snap back at this new high. If it's not confirming, I will buy some index puts at some point, probably September 570s or 575s. Not only as a hedge, but also as as trying to make money on the downside, because things go down 3 times as fast as they go up. But then market's just grinding. It's a serious format like this, and you can't question it. SPY, same thing, retesting the high. Again, volume is very weak. MACD and RSI not confirming. Volume is very anemic. The volume peaked actually at a very high level on the downside a couple of days ago, or 4 trading days ago. Also watching VIX. You guys got to watch VIX. VIX had, these are all dailies, by the way, 1 year, 1 day. VIX had a spike from 15 to about 22, and then now we're retesting that. But on this one, there's a bullish divergence developing. So with that said, it probably will make sense for me, probably sometime today, to buy some index puts. The stocks that I am in, well, let's go to the Max 7. Apple had an amazing run. Tim Cook went and kissed the ring at the White House, and that's what happens this year. Some of the members made some money actually with AAPU, which is the 2X ETF. So going forward the year, I'm going to basically trade equities, the underlying. For the first 6 months, I traded mostly options. I would say my trading was 75% options, 25% index and equities. I'm going to flip that around after I had a coaching session with my coach a couple of weeks ago. And I'm going to go 75% equity, because the account can handle it. So 75% equity, 25% options. And that's what I'm going to do the rest of the year. The plan has been set, and I'm going to execute that plan. That's Apple, Amazon, not much. Out of all the Max 7, Apple and Amazon earnings were not as good as the other ones. The other ones were just pretty much, by the way, 85% of the S&P 500 has reported, and out of that 85%, 80% beat. So we know what happened to Meta and Microsoft. That's Microsoft made an all-time high, gapped up, came down, closing the gap. Can't question what charts, man. Look at that, right? I mean, Meta and Microsoft in 1 day added $400 billion in market cap. Netflix was the other one that did not have, it has good earnings, but then it sold off, obviously, because this is what happens. Good earnings come, stocks sell off. And the reason is they're just exhausted on the way up. Palantir, some of the crazy ones. Palantir, new all-time high, gapped up again after the last earnings report, and can't question it. I mean, people go, oh, isn't that too expensive? I'm like, yeah, so, market's telling you it's expensive, it's going to stay expensive. Same thing with Robinhood, new high today, new all-time high. They get these little one-day sell-offs, and then retail steps up and buys it, and then they're correct. There's no questioning any of that stuff. Tesla is actually breaking out now. Tesla, I'm definitely going to trade. Not Tesla itself, but TSLL, which is the 2X ETF. If you look at Tesla, we're breaking out of a wedge today. MACD is going above zero. It's been completely neutral. My goal in Tesla now is going to be a retest of the breakout, and that's when we need to get in. So not yet Tesla itself, TSLL, which is the 2X ETF. HIMS, very volatile stock, obviously. I'm watching that one. It seems like it's building a bear flag. That stock is so wild, but I will trade the 2X ETF for that, which is HIMZ. Bitcoin, this is the BlackRock ETF, IBIT. Just consolidating, going sideways before it goes higher. The way it looks to me, this is the 2X ETF of IBIT, which is BITX. Gold down a little today, but we had a really great trade on NUGT. Gold's still consolidating, but 2X ETF of gold miners, amazing move, actually. I sold out a little too early, but made good money. If you guys go check the positions on the community page, you'll see it, what my position was. We were short a put credit spread and long a call, 80 calls, and I was short the 75 puts and long the 70 puts. That's a put credit spread. Today was really that low, was it? Yeah, it's bouncing already. We'll look into this again on a pullback. I'm missing a lot of trades because I don't have confidence at the moment, but the group is doing fine. Soundhound was one of those. I was positioned perfectly well. I was short puts, long calls, and a synthetic. When you get disgusted with other positions and you're trying to manage equity, you don't step up, but then that's called, right, losing your confidence. Even at my level, I have to watch it, but there'll be a time. So this will definitely be one to buy on pullbacks. There's no ifs and buts about it. We were short Joby Aviation. I don't know if my members are still short. Made a little bit of money, not much. Definitely bearish divergence developing there. That's still a short. That company doesn't belong anywhere at that level. Couple other names I'm watching. Oklo pulling back to 20 EMA. I'm going to trade the 2X ETFs of these. Coinbase. Actually, I did trade it, made money. Actually, I'm keeping track of it. So I have made 3 trades on underlying equity and 3 positives. My goal is to make about 10 to 15K a month on just trading equity as opposed to options. Yeah, I definitely will introduce options at some point, but I want to do it with the 2X ETFs of these underlyings. And there are plenty of them out there. AMD. Earnings were okay, sold off a little bit. 2X ETF of AMD's AMDL. Missed the Micron trade, obviously. Again, no confidence. I said, we pulled back to 200 EMA. In fact, it's public. I want to buy Micron. That was 20 points ago. But today, everything seems like it's kind of topping out. So I'm not going to buy anything, obviously. But I'm watching SPY. But I think I'm just going to buy some puts on triple Q. Yeah, that turning red as well. Let's see the 2-minute chart on that. Yeah, we're just taking out. On the next bounce, I'll buy some puts. I don't think I'll be doing that live, but I'm just giving you guys the playbook. Rocket Lab. Now it's back to green. It was red. Earnings are out on that. ASTS earnings are coming out today. It is right on the buy point, but again, I don't want to risk anything, honestly. I cannot trade through earnings. If this is bad, It's right on a 50 EMA. Yeah, it just obviously you should, today after the close of the earnings. So I usually don't trade around earnings. MACD is still selling off. It's on a sell. We did short this one actually. A couple of the other shorts that I actually had that worked out perfectly well was Sezzle. Yeah, that's coming down to the 200 EMA now at right about 80. I mean, we shorted that thing up here. You guys see these labels? Yeah, and we covered here. And look where we are, right? Sometimes you just got to hold things a little bit longer because you're convinced, and then you buy something else and it goes against you, you lose your confidence. So I'm going to give trades more time now for the rest of the year, short or long. We're also short TSSI. And sure enough, on the second bounce, actually, one of my members asked, should we short this again at 31? I said, I don't know. Of course, it's 20. So, but there's plenty of points to be made. No rush. I'm not going to be a panicking, as President Trump says. I'm just going to do my thing and then try to get me to 100% by the end of the year, hopefully. Yeah, calm and cool and collected, man. You can't just get upset. Market knows best. Don't argue with the market. Lululemon. Yeah, I mean that thing is a disaster. Just absolute disaster. Just keep selling off. We're at 186.5. I mean, Lululemon has been red. I don't know, day after day. It's just disgusting, really. But then you're gonna say, well, it's not cheap enough yet. I'm like, no, cheap gets cheaper, folks. So, although I'm holding October expiration options, when they get cut by 50, 60, 40%, it's not a good thing. Although, if you look at Lululemon's super long-term chart going back to the original days of $2 a share, you got to once in a while look at these. And it's first time it's breaking its 200 EMA on the 200. I think support is probably 150 now, and nothing positive, honestly. So on any rally now, hopefully earnings will give it some relief like Nike did. Yeah, nothing positive in that, to be honest with you guys. But that's why you cut positions and you just kind of, just watch. You don't go die with every win, and you don't die with every loss. You just keep it even keel. We'll see what happens with LAC. Hopefully I get called away, and then I'll be like 90% plus cash, which cash never burns a hole in my pocket. It goes to money market, earns me 4.5% while I'm trying to work on new strategies. What else? Yeah, that's about it. Yeah, I'll just go to the front and let's see if I'll put the link up if you guys want to come up. Let's see where we are. Okay. Okay, so here's the link. If you guys want to grab it and come on, you're more than welcome to. I'll be on for another 10, 12 minutes. You can come on, ask me anything you want. Is that what they said? What he said? Shark sterile. Gold will not be tariffed. Yeah. What happened to the audit of the Fort Knox, by the way? Do we still have gold? Those tons of gold? I'm not sure. I don't know. We'll see. I mean, gold still going sideways. Let's actually go back and show you guys that. Why I pay attention to something not directly related to gold, but I do pay attention to it. So this is the dollar index. This is what your dollars are doing, folks, against another basket of currencies. Actually, see, it's rallying today. We had to actually gold. I mean, this is the dollar index, 1 year, 1 day. Dollar is down about 11.5%, 12% against a basket of currencies this year. So that's why it literally is an inverse indicator on gold. So while the dollar has been selling off, right? So let's take this dollar topped on January 13th, sold off all the way to July. Okay, and now let's take a look at gold. You guys will understand the correlation between the dollar and gold. Okay, so what did I say? January 13th, that was the bottom. Dollar started to sell off. What did gold do? Complete opposite. Melted up, basically. Went from 2,500 to 3,500, right? So now dollar has been kind of gaining a little bit, although I think on the long term it's still going to go lower and lower and lower. Gold is just going sideways. Now, this type of pattern here, this long month, I don't know how many months this is actually, this is going on since April. So 3 month, almost 4 month consolidation. On a breakout here, gold is going to 4,000 easily. On a breakdown, you know, probably back to 3,000. So that's why I watched the dollar index. This is the dollar index. So I highly recommend you guys watch that as well. And with the stock market, you know, I watched TLT. TLT is the iShares 20-year Treasury bond ETF. So it's an inverse indicator, by the way. So if TLT is going up, that means interest rates are going down. If TLT is going down, that means interest rates are going up. Interest rates have been going up, regardless of what the Fed has done. Fed has cut the rates by 100 basis points, but the bond market has raised the rates by 100 basis points. This is 3 years on interest rates. This is 10-year. Okay, so this is the ZERP area, the pandemic area, when interest rates were zero. Obviously, they had to become zero. And then since then, we raised the rates from 0 to 5.5%. This is 5.5%. So we're about 5 on the 20-year. Well, we're a little bit less, about 475, 480. You know, there used to be a really strong correlation between interest rates, obviously, and the stock market. So, well, that's done now. That doesn't look like there is. And yeah, so markets, you know, interest rates are going up, markets going higher. So at some point it will make a difference. I don't know when, but I don't think it'll ever be as correlated as it used to be before. But for my money, I can't buy things here now. I'd rather stay in cash, and I'm not going to push my luck with whatever. So macro, good morning. Hey man, enjoy it. Every day is a different day for you. They grow every day. Their mannerisms change. Everything changes. Best thing on the planet to having kids. Best thing by far. You manage. You know, first one is tougher. Second one gets easier. You manage. Obviously, you have a wife or whatever. I mean, you both are going to do your share, but I'm glad you are a hands-on dad, hopefully changing diapers and feeding her. Right? I hope so, because I did it. Market's just grinding higher, just kind of going sideways. Not much. Don't worry about the market. You know, I know you're more long-term than most people. So I put the link up. If you guys want to come up for maybe a few minutes, you're more than welcome to. It's right there. If you have any questions, please shoot. This is the time to do it. So let's go through the CPI inflation coming out tomorrow, 5:30 in the morning, Pacific. Thursday, PPI inflation. Retail sales on Friday, and consumer sentiment data on Friday as well. So pretty big news, actually. But my guess is if CPI and PPI are behaving, interest rate cut is definitely going to be in the books, without a question. Okay, and so we'll see. We'll see what happens. And I am not convinced that if the rates are cut, the market's going to take off or melt up. Like today's headline is melt up or top. I'm not trying to be contradictory or, you know, or contrary opinion. When the rates are being cut, there are reasons for the rates being cut. If the rates when every asset class is at an all-time high and we're pumping money nonstop anyway, why do we need to cut rates? You know, a lot of you are going to say, yeah, consumer loans are going to come down, mortgages are going to come down, homes are going to be more affordable, all that stuff. I get it, of course. That's important. But do you guys think banks are going to cut the rates as fast on your credit cards and mortgages and car loans as fast as they raised it? Good luck. That's not going to happen. There's always a lag. And Fed already has cut the rates by 100 basis points from the start of last September. The bond market did not buy it. The bond market's still cautious about inflation. So this week's numbers are going to be pretty important. So, yeah. Well, since none of you want to come up, I'll say goodbye, go have a cup of coffee, and continue with the rest of my day. So Wednesday, I'll be back. I may even come back tomorrow after the inflation data if the numbers are really, creating some volatility. We'll see. But the rest of the day, I'm just watching things, and I may actually buy some index puts. Just a few of them, nothing major. But yeah, that's where we are. See you guys on Wednesday with a couple of different topics. What do you guys think, by the way? You can email me to Sergio. If you're a member, by the way, I know there's 2 new members. I keep saying it. Please email me, sergio@sergioavedian.com. I will send you the Telegram chat group link. And so also, you guys, if you're a new member, please tune in on Wednesday at probably 4:30 p.m. Pacific. Those are really, really good. I think those are probably better than the rest of the lives. But yeah, so maybe hopefully see you guys tomorrow. If not, subscribe, share, put the turn on all notifications so you get notified if I'm doing like impromptu live or anything like that. Here's one of my members. Yeah, man, it's not easy. It takes time, but I'm glad you hung around. I know you were a little disoriented. It disorients me after 30 years, so I can imagine. But I think you have a really good foundation now. I keep saying it on this channel. This is not for YouTube money. YouTube money is trash. There's nothing to do with it. I don't need it, honestly. I like paying it forward. I like teaching. I want to teach you guys how to fish. And I don't want to give you the fish. Giving the fish is easy. You'll feed yourself for a week. And then what? There's no more fish. And then you go fishing and then your pole breaks. Well, I want to make sure that your pole doesn't break. I want to make sure you're equipped to fish. And, that's all my goal, honestly. If I have the time, I'm very happy to do it. You, man, you as well. Be safe. Take care of that little one. Take care of that little one. That's precious right there. Enjoy the journey, my man, because every age has its own problems. Okay? Trust me. I know it. Having a 23 and a 16-year-old, I trust me, I know. But anyway, so stay healthy, please. We'll see you guys hopefully tomorrow. If not tomorrow, definitely Wednesday for Trading with Sergio Wednesday edition, and on Friday for Power Hour. And I'll see my members on Wednesday for Members Live.